lot going on. We're going to get Ed Dowd here in a second to discuss everything economic and financial. You really don't want to miss this because he's extremely knowledgeable on all this and brings some really good insight. Ed is fantastic. He's a former BlackRock portfolio manager and is the principal at Finance Technologies, one of the principals. Really smart on what's going on with China, Asia, the economy, and all of it. So here we go.
I'm honored to be back with a good friend of the show, Ed Dowd. He's principal at Finance Technologies, formerly at BlackRock, and kind of a master of the universe. So, Ed, thank you for coming on today.
I wouldn't say master of the universe, but thanks for having me on,
Todd. We were talking before. It's discouraging seeing what's going on politically and economically. Give me your gut feel as to what's happening, please.
Well, Trump's approval ratings are hitting new lows, I think, as of yesterday. And he needs before the midterms, he needs to pull a 180 on his recent pronouncements on immigration, the softening of the deportation talk, and also accountability. Those are the two major issues. That's why he was elected. And also, he was elected because of the economy, and he just needs to be honest about the economy. There's been a little too much gaslighting on we're in the golden age. We're clearly not in the golden age. We're in a silent labor recession. The capital markets will figure this out eventually. What's been holding up the economy is a slow walking of illegal deportations and shutting down the fraud, and AI data center spend, which that story is starting to unravel. It's cleared a lot of people, especially the capital markets recently, and the behavior of these stocks in the earnings season. The big AI plays have all announced massive capex. The stocks were not rewarded. People are now starting to figure out that there's not enough power to hook these data centers into, and so the markets are starting to anticipate a dilution of the stock, no returns, and oh, by the way, that capex spend will probably be never come to fruition, and capex will pause at some point. So the markets are starting to sniff this out. Yesterday we had I think the Challenger jobs report came out, the largest layoff since January of 2009, and the bond markets responded. The 10-year went lower. The stocks sold off. So labor markets and growth expectations are going to start to shift from growth and inflation to slower growth and deflation, and yields are going to go lower. Stock prices will come under pressure. We have a housing problem. That's been rolling over slowly. The boomers are not realistic on the sales of their homes, the prices. Millennials, the buyers can't afford it. We have a spread on homes for sale versus homes sold that we've never seen before. Usually those two time series track, and so that there's the housing market's frozen, and it's slowly going lower, and that's going to turn into, I think, a twin problem of a stock market bubble bursting while we have a housing problem. And not to mention, China is a disaster. China is going into the acute phase of its crisis. We have a big report out on that, and that's going to cause contagion from Asia. Asia is in trouble.
Wow. So on the housing issue, let me drill down there. A lot of you've talked about before that this was driven by immigration, illegal immigration, putting pressure on the housing market. Do you think that's backing off, or not? I mean, what, 2.5 million plus have maybe left?
Yeah, look, right as in the fourth quarter of 2024, new tenant rents started plummeting, and new tenant rents lead all tenant rents, which lead home prices. So that started in 24. That's continuing. We had a unprecedented, speculative housing boom after the Fed lowered interest rates to zero for COVID, bought back 1.4 trillion in MBS. So that freed, that gave new capital to the banks to lend. So we had unprecedented price appreciation in homes. Then we started to see supply come onto the market, and we had a huge multifamily boom, the likes of which we haven't seen during the 70s, and that was driven by immigration. And those projects are going to start rolling over. They're going to get underwater. That's already starting. So
that may be a good thing, because they were encroaching, like in certain states, especially in the Northeast. They're taking over local zoning and building all these massive, pod houses, essentially. You see them all over the suburbs everywhere. I mean, is that going to slow down?
That's already in the process of slowing down. The new permits peaked in 22. The reason why the housing market and the construction construction market has stayed okay is because multifamily housing projects take longer than a year. A single-family home from permit to finish is about a year. These projects are longer. Construction is starting to roll over. Workers are going to get that's going to add to the layoffs. So it's the classic cycle, and the market is paused because of affordability. Home prices are about 30% too high by our calculation, and the only thing that fixes this is price. And President Trump's not helping himself by making pronouncements. I want to protect people's wealth. I don't want home prices to go down. Well, first of all, he doesn't control that. He can do some things on the edges. He's announced, he told Fannie Mae and Freddie Mac to buy mortgage-backed securities to tighten mortgage spreads, $200 billion. That's not going to do it. The market's the market, and the only thing that clears this is prices. And when you have a weak labor market that's going to get worse and more layoffs, we've seen this movie before. Home prices eventually will collapse. And if we get the stock market bubble bursting, the boomers who are sitting on their stock market gains will start to get nervous, because that's probably what's preventing them from lowering prices. They feel fat and happy, but once you get the two of those things going in the wrong direction, they'll panic and lower prices.
So should Trump be getting on the horn and national addresses once a month and tell people and be honest with people, look, we got to go through some pain to deal with what I inherited, and it'll come?
He should have done that last year. Unfortunately, he owns it. And, some fireside chats would be great, but I don't think he's got it in him. He's been talking about this is the greatest. I just don't. His advisors are giving him a bunch of BS. He was on an interview. He was talking about how great the economy is, and then I think the interviewer said, "Well, the polls suggest that's not correct." He said, "Well, the polls are wrong," or something like that.
Yeah. I saw that. It's discouraging. And meanwhile, he's talking about building an arch. I'm like, dude, that's your legacy, but it's not. I mean, I'm glad DC's cleaned up, but wow. Tell me about China. We're entering a demographic crisis. What else is the crisis there? It's like several things at once, right?
Yeah, so we put out an extensive China report that's available on our website, financetechnologies.com. We have a cheap version, and we have the institutional version, two different versions. Basically, we did a deep dive. And first of all, I just want to compliment my partner. He did a lot of data mining. The data is not easy to work with. You have to kind of fix it, because they don't report numbers in January because they take a holiday. So you have to link the series, and it's not easy work to do. But the data suggests that their economy, which really kind of peaked out in 2020, that's when the demographic decline really began. They plateaued in 2015, and then they decided to overbuild homes to keep people employed to the tune of 20 years worth of housing supply into a demographic decline. So the first part of their crisis is new starts, new builds plummeted 70%, but a lot of the projects were long-lived. So construction has only dropped 20%, but that's now going to into the crisis mode. So their internal consumption is going to fall off a cliff, and there's going to be more labor problems in China. And their GDP came in at 4.5% in the last quarter. That was the lowest GDP number in about 3 years. And then additionally, their fixed new investment for the first time in the fourth quarter went a year-over-year growth rate went below zero for the first time ever. If you take out the COVID blip, which was very temporary, their fixed investment is now going negative year-over-year growth. So this is all coming to a head. Their GDP prior to COVID was 80% of priced in U.S. dollars. Their GDP was 80% of the U.S. Priced in U.S. dollars today, their GDP is 60%, and their GDP growth priced in dollars has been zero since COVID. So they got problems.
Your government doesn't care about you. That's why you need a medical emergency kit. It contains life-saving medications like ivermectin, Z-Pak, and antibiotics. Stock them before they block them.
A warm welcome here at the National Press Club. Welcome to the journalists, welcome to the Embraer team, and welcome to the other guests that we have here. We're going to announce, and as some of you guessed it right when they came in, the first E2 order by an American operator. and that operator is Avelo. We believe this is really a strategic shift to unlock profitability for the customer. I'm very pleased that we have Andrew Levy here as the CEO of Avelo, and I'm very pleased to give the stage to share a little bit more about what Avelo is going to do with the E2-195. Thank you very much.
Couldn't be more excited to be here as part of this historic announcement. We have such a great cultural fit as companies, so we're very, very excited to be Embraer's newest customer. We launched our airline in April of 21, and our target is focusing on small secondary airports of large metro areas. We've carried over 8 million customers since we started on 63,000 flights. And we've done all these things with 1,200 of the greatest crew members I could ever imagine having, and many of them are here with me today. This is the right airplane for us. It's going to open up opportunities for us that no other aircraft can serve. The best thing about the airplane, of course, is you will not find a middle seat on this airplane. It doesn't exist. We won't have any to offer. It's going to be the best cabin in the United States, and we're so excited about that. This is going to elevate our experience to the highest level, and we think our customers are absolutely going to love the airplane.
So is that why Xi's consolidating power?
That if you want to know what's going on with these power struggles in China, it's directly related to the tremendous strain that they're under. And so what they did post 2020 was ramp up the export machine, and this is why we have trade wars. So they've been able to kind of grow their economy in yuan at 5% by exporting to the world. And that's kind of filled the gap, but with all these tariffs and whatnot and these trade wars, that's bearing down on China. And so we have a big economic crisis coming in China, and it won't be advertised because people don't know people don't know how to analyze it, and there's not a lot of data. But there is enough data that you can put together time series that show the rate of change and the trend. People say the Chinese numbers are bunk, but we've proven that they're generally okay, and especially if you want to figure out the trend.
So how does that impact the U.S.? I don't think Europe really matters anymore, but
well, it's going to cause contagion from Asia. So Japan, which has already got its own problems and a central bank problem, China is Japan's #1 trading partner. The U.S. is #2. That's on total trade, imports and exports. South Korea, same thing. So there's going to be an Asian crisis that will, reverberate around the world. Japan's already having problems with their debt issues and their currency, so it's just going to get tougher as we roll through 2026.
Is that why the metals market part of why it's rallying, or is that just monetary debasement in general?
Gold and silver are their own thing. They're anticipating distrust in a lot of government institutions and geopolitical issues, war, debasement, what have you. The copper is being hoarded by China. They're not actually putting it into industrial demand because the industrial demand is declining. But they have so much excess money supply, and they're debasing their currency that they've decided to start turning fiat money into real things. So they're hoarding copper. And that also may be indicative of a potential geopolitical conflict down the road. So they want copper on hand.
Yeah, wow. It's like in Russia when there's currency issues, they all go buy TVs. It's like so they can sell them. So what should Trump do on the economy right now? We've got the tariffs in place. Yes, that's creating revenue, but if you're saying deflation, then that's not going to be a problem with inflation. So what should Trump do right now, do you think?
Well, Trump should change the messaging. It's a messaging. Yeah. I mean, he can't stop the cycle. I'm a big believer that this is an endogenous cycle inherent to the system. We're starting to see the credit part of the cycle manifest. We're seeing private credit come under pressure. BlackRock just marked down one of its big private credit funds 19%. So we're starting to see credit tighten, credit unravel. The U.S. consumer is dead and getting more dead as we go forward, and eventually that'll affect the cash flows to the system. There'll be more bankruptcies and and the Fed is behind the curve. Real interest rates are around 1%, and they should be 100 basis points lower just to get to neutral. But we're going to have to go below that to stimulate the economy, because the economy is not growing. This 4.5, this 4% GDP number we got coming is due to some tricks on the import export line and GDP data center spend. And that does not give people jobs. These data centers do not produce jobs.
What about the Fed? Is Warsh going to get confirmed, do you think?
That's up for debate, but I was surprised by this pick, because if you listen to what he says, he's not a big fan of using the Fed balance sheet. He thought that the QE was a disaster and you just inflated assets. So it befuddles me a little bit why he was chosen. And if he gets in there, the capital markets will be probably a little upset by that, but it is what it is. I was just shocked that he was actually picked, because he wasn't the guy. And what I'm hearing from people that care about asset prices on Wall Street, that the whisper before anybody was confirmed was anybody but Warsh. That was the mantra on Wall Street.
Well, maybe that's a good thing then, knowing Wall Street. Where do you see bonds in the next short run?
Look, this is. I said yesterday that yesterday was the first day the capital markets maybe woke up a little bit, and that growth expectations on the economy and inflation are changing. It's a process; it'll take time. But I put out a post in the middle of January saying, unpopular opinion, U.S. long duration treasuries will be the best asset class by the end of 2026. And the current theme is, the U.S. government is going, the dollar's going to zero, U.S. debt is trash. But when we have a slowing growth, what sets the bond markets are growth expectations and inflation. You know this, and once those change and other risk assets sell off, we're going to see a flight to safety. We're right in the process of renormalizing the yield curve, which after 1,000 days, I think 1,000+ days of inversion, the longest inversion ever. Once the yield curve starts to normalize, a recession is right in front of you, and it's starting to normalize. So it's it's what we call in our bond days a bull steepener. It's a bull steepener for yields. It's not a bull steepener for the economy.
Wow. Let's talk software and its sister AI and crypto. What you mentioned that there's no jobs created, and that the AI data centers are not going to get built as they're advertised. But what do you think happens to that whole sector? It's really been hammered in the last few days.
Yeah, so the software as a service sector has been smashed. In the last 30 days, it's given up 6 years of relative returns. It's been a wipeout. The current thought on Wall Street is that these companies are dead on arrival because of AI. That may or may not be correct, but that's what the current sentiment is. One of the big problems is private equity and private credit is funded a lot of these what are now considered zombie companies that don't have any profits and cash flow. So a lot of those companies are going to end up being zeros, and you know how this works is the feedback loops. Once bond people don't like to see things go to zero, so there'll be a tightening of credit. So that's the current sentiment on software as a service, and that just and so I was talking to a smart risk manager at a hedge fund, and we were debating what that means. Can you have a software sector that's imploding and keep the multiples on AI that don't show any return on equity yet? And so you can't have tech, which has been leading the index, have one big sector of tech implode and then hold those multiples on the other parts of tech that are supposedly going to eat their lunch. The math doesn't math.
Where do you see value in just good old fashioned dividend stocks and cyclicals, or what?
I don't like the stock market in general. Once this gets going, I've been if I had my hedge fund funded, which we're working on, I'd be in mostly U.S. government treasuries out about 5 to 10 years.
Wow. Crypto? Yeah. Any thoughts there?
Look, crypto. People have been asking me about crypto for years, and I'm not, pro or con. I'm a math guy, and it's
Mhm.
always been 95% correlated to the Nasdaq. So you know what you own. You own a piece of the Nasdaq. Interestingly enough, crypto peaked in October, and it's getting absolutely smashed. And the Nasdaq should have followed. So, but the Nasdaq is consolidating sideways. So either Bitcoin's going to rally or the Nasdaq's going to go down to meet Bitcoin. Something's going to give at some point. But Bitcoin is also with the recent revelations in the Epstein files. People are finding out that they've been, funding sex trafficking and illegal activities for the global cabal elite. And I think if you were buying Bitcoin for freedom, that doesn't ring freedom. So
No.
there is a problem with Bitcoin. Technically, it looks like it could. If I had to guess, it consolidates here, does another bear market flag kind of pattern, and then goes to a lower low after weeks of consolidation. That's my guess.
Interesting. What about, do you know anything about the kind of the whole tokenization of the economy, XRP and all that stuff? Any thoughts on that?
Obviously that's a boon for Wall Street. I don't know why Main Street would care. It's you and I have been in this business a long time. It's the newest fad. Larry Fink wants to tokenize blades of grass. I mean, I don't really understand it, and I don't think it's going to go as smoothly as they suspect.
It would be nice to move money instantaneously, but other than that, I don't see where it's creating money, or creating value. But that's just me. Anything else you want to get out, Ed?
There's going to be a lot of news flow over the next, I say, 6 months, and it's going to be difficult to kind of figure out what's going on. And I think it's your job and my job to kind of sift through the noise and figure out reality. And unfortunately, the war drums are beating. We might go to war with Iran at any moment. China is in such dire straits that they need a distraction. And then we, of course, have insane Europe wanting to go to war with Russia. So we got a lot of uncertainty ahead of us. We have the cycle bearing down on us. There's going to be a lot of chaos, and people will point to this reason or that reason as to why the stock market's going down. The stock market's going to go down because of the cycles, period. Not because of, some Fed pick or this or that. They'll make up an excuse, but once the market stops consolidating, and it's in what I think is a distribution process, there'll be a markdown period, and people will panic.
Ed, thank you very much. You going to CPAC?
No, not this year.
Okay. All right, my friend. Take care. Thanks for coming on. Really appreciate your time.
No problem.
Bye.